Wall Street looked calm for a moment, and then the fear came back. Monday's market was a reminder that when war risk is driving the tape, early strength can disappear very fast. U.S. stocks finished lower, as investors struggled to balance two very different stories. On one side, Fed Chair Jerome Powell helped calm the bond market. He said longer-term inflation expectations still look well anchored, and that the recent jump in energy prices has not yet changed the bigger inflation picture. That gave investors some relief, pushed Treasury yields lower, and brought back hopes that rate cuts later this year are still possible. But the market did not stay focused on Powell for long. The bigger story was the Middle East. Investors became more worried that the Iran conflict could drag on and hit global growth through higher oil prices and more uncertainty. Reports said additional U.S. military assets were arriving in the region, and there were also headlines that President Trump was considering stronger military options tied to Iran's nuclear program. At the same time, Trump sent mixed messages talking about possible talks with a new and more reasonable government in Iran, while also warning that if no peace deal is reached and the Strait of Hormuz is not reopened quickly, major Iranian infrastructure could be hit. That mix of hope and threat kept investors on edge all day. The S&P 500 closed down 0.4%, even though many major groups were still trying to hold up. Semiconductors were especially shaky, showing that this market is still very sensitive to risk. When traders are unsure about war, oil, and global growth, high beta areas like chips often feel the pressure first. This is why today mattered. The market is no longer reacting only to interest rates. It is now trying to price in geopolitical risk, energy risk, and policy uncertainty all at the same time. Powell may have helped the bond market, but he could not fully calm the stock market. Because investors know one sharp move in oil can quickly change the inflation story again. Several strategists made the same basic point: this market is being pushed around by headlines, and that probably will not stop until there is a clearer sign that the conflict is easing. Until then, rallies may stay fragile and volatility may remain the real theme. Now investors turn to Tuesday's setup with consumer confidence, JOLTS job openings, Chicago PMI, and comments from several Fed officials all on deck. Nike earnings after the bell will also be closely watched. The next session could tell us whether this market is ready to stabilize or whether fear is still in control. Don't forget to like and subscribe for more daily market recaps. This is Wilson.